Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Even if you didn't read the 830 pages, it had a lovely purple lavender cover. And you could walk around campus toting your Obstfeld and Rogoff, and you get cool points just for that. Joining us now, one of the foundation academics we have on our international macroeconomics, Maurice Obstfeld. He's with the Peterson Institute with Posen and Blanchard. He is at Berkeley forever and always. Professors, thank you so much for joining us. What I see percolating right now, Maurice Obstfeld, is real tensions about supply lines falling apart, supply lines fragile because of tariffs. The interstitial wiring of our trade system, is it broken?
Well, it's not broken yet, but it's under strain. It's under strain because of tariffs. It's under strain because of geopolitical tensions. It's under strain because of the trade war. And we can see this in the threats flying back between President Trump and China right now over everything from shipping to rare earths to cooking oil.
There just seems to be two Americas, one affected by goods and trade and worry and angst, and another a financial boom like Morgan Stanley. Can we exist like this?
Well, the U.S. economy has become increasingly financialized over the decades. And, at some level, the U.S. is the world's banker at this point. And interestingly, finance hasn't seen the kind of backlash that we've seen against trade. Trade is blamed for deficits with other countries. It's blamed for the decline of manufacturing. We don't see people wanting to curb financial transactions. Quite the contrary. We're seeing deregulation, stable coins, and the like. So there really is a divorce between those two sectors. And the question I have is, can that go on forever?
Yeah.
Or will the trade tensions eventually feed into the financial sphere? I think they will.
And Professor, that's kind of where we are right now. The folks that are supporting tariffs, they say, we are not seeing the economy slow down. We recently had a very strong third quarter GDP print. We are not seeing a material increase in inflation data, although we are now lacking data because of the shutdown. So, again, the supporters of tariffs are saying we're just not seeing those economic headwinds coming from tariffs. So my question to you is it just a matter of time, or are corporations adapting?
Oh, I think it's a matter of time. There is some adaptation, of course, as corporations look for cheaper suppliers. But, just sort of look at what we've seen. We have not seen any material fall in the dollar prices that foreign countries charge for us. We've seen some limited increase in consumer prices of imported goods and close substitutes for those imported goods, but not enough to offset the tariff. But we've also seen substantial revenue coming into the Treasury from tariffs, which is being paid by our importers. So how do you square that circle? You square it with a hit to profitability, and with the observation that firms have been swallowing these tariffs to some extent while they wait for tariff policy to stabilize and figure out what it's going to be going forward. Now that we kind of know where we are with tariffs to some extent, I think firms are going to be adjusting by passing those cost increases on.
Professor Obstfeld, synthesize here, say, the work of Douglas Irwin at Dartmouth with down the hall from you at Berkeley, Barry Eichengreen, and this whole trade upset and the risk to the dollar. This goes back to Obstfeld, Rogoff, and frankly back to Mundell. I'm assuming you don't have a fear of the gloom crew on the dollar. Is that correct?
The gloom crew. I'm worried long term about the status of the dollar. I think there are very strong forces keeping the dollar in the prime position it's in global markets as the world's currency. But foreign countries are increasingly worried about the kind of coercive, punitive actions that this administration has been taken to enforce its will globally, not just in the trade sphere, but looking at issues like internal politics. We see this across the board for positive and negative. The Treasury right now is bailing out Argentina for largely political reasons. So I think the bottom line is that foreign countries no longer trust the U.S. as a responsible steward of the global economy, and are going to seek to decouple and insure themselves against policy volatility emanating from right here.
Maurice, I got to go to breaking news. Paul, can I ask a rude question of Professor Obstfeld?
Yeah.
Professor, an Eichengreen question for you. Maurice Obstfeld on gold at $4,200 an ounce. What would Barry say?
I'm not going to speak for Barry, my good and longtime friend, but I think he would say that, I guess I am speaking for him. Let me speak for myself. Barry and I agree about a lot of things, not everything. Gold is a bellwether of fear, and the escalation in its price is far beyond what you would expect to see coming from inflationary fears, although I think that's part of the picture. I think it betokens a shift into something that is perceived as safer than the dollar and not subject to extraterritorial action by the U.S. I mean, we've seen the escalation in price. We've also seen increasing purchases of gold by emerging market central banks. A lot of that is China, but not all of it is China. Okay. And so that, I think, tells us something about the fear out there. And, the escalation in Bitcoin prices is a similar phenomenon.
Professor, I got to leave it there. Too short a visit. Thank you so much. Thank you to you and the Peterson Institute, Adam Posen, Professor Blanchard, and others for just great support of what we do. Maurice Obstfeld, forever from the University of California at Berkeley. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Chris Whalen is definitive on the American financial system. I'm standing surrounded by dinosaurs in Houston, and I'm going, I think I got Chris Whalen in a couple days. Must listen for Global Wall Street. He joins us now. I can't say enough about his value to the American financial system, his history, his books, and also his work at Whalen Global Advisors. Chris, I'm just going to cut to the chase. First Brands, Tricolor. Are we living 2006, Chris Whalen?
Yeah, and we're kind of repeating the same mistakes. If you don't have a trustee to hold the paper, then you have double pledges of collateral. Remember Bear Stearns?
Yeah, I'm familiar.
Same thing. So it's called fraud. And, the terms on a lot of deals in the past 10, 15 years have loosened in favor of the issuers to the disadvantage of investors. And First Brand is a case in point.
Chris Whalen, there was no other question at my CFA meeting in Houston. No other question. What's the contagion? You're expert at the history of this. Come on. Is it like Continental Illinois? Is it like Bear Stearns, as you mentioned? What's the contagion factor in October of 2025?
It's brewing. We won't really see it until we do. So the commercial side of the equation is where the problems are for the banks right now. They are trying to hide them as best they can. We've just changed the accounting rules for loan modifications, by the way. So if it pays for 12 months, we pretend the loan was never modified. How cool is that? And I think that the industry, the regulators are all walking past the graveyard because private equity, commercial real estate, all of these sectors are still having significant problems. On the other hand, the consumer is quiet. We've been releasing reserves and reducing provisions for loan loss on the consumer side because there's nothing happening yet. That may come next year. But the commercial side is where the action is right now, Tom.
Chris, I've learned a new term, I guess, in the last few weeks, and that is debasement trade, whereas my understanding is investors are saying, I'm worried about all this government spending around the world, so maybe I don't want to own government securities like currencies, maybe even the government debt, and that includes the U.S. stuff. Maybe I'll buy some other stuff like gold. What do you make of that?
I've been telling my readers to put at least 10 to 15% of their total allocation into gold for most of this year. And I think it's only beginning to start for the simple reason that there isn't a lot of deliverable supply in gold. People are worried about deficits. They are worried about the dollar. And I think they're right to do so. The dollar is probably going to continue to go down. We have structural problems in this country. You notice Chairman Powell is talking about continuing to shrink the balance sheet. Why? As Bill Nelson at Bank Policy Institute wrote this week, the Fed funds market may collapse thanks to the big balance sheet. So we have a lot of issues in the background. The markets look great. AI, everybody's still making tons of money. But in the background, people are worried because when you have these all-time highs one after another, they tend to not be confirmed after a while.
For Global Wall Street Worldwide on YouTube, across all of our audio product, Christopher Whalen joins us. His one volume on the American financial system, my book of the year, ages ago. We're begging him. He's going to put a book out. DiCaprio's scheduled.
Oh, all right. Got him signed up.
Paul,
nice.
Continue with Chris Whalen.
Chris, talk to us about liquidity in the marketplace. And I'm thinking about not so much the stock market, but just kind of across the fixed income space, maybe the currency space. Is that a worry for you?
Yes, very much so. It's almost like we're back to December 2018 when Jerome Powell almost ran the ship aground. You recall they pivoted very quickly in January of 19 and started easing. That's when they went to this ample reserve policy that they've had since then. And I think that what we're worried about is that the model that the Fed uses to judge whether liquidity is adequate or not is based on GDP, which has nothing to do with anything. Liquidity is highly compartmentalized. It does not flow one way and another. So you really don't know until there's not enough. Chris, and I think that's where we are today.
Chris, I got to get two things in here. It's too important. Sweeney's lined up. Sweeney's got notes this morning for Chris Whalen. I have Christopher Waller tomorrow. What is Chris Whalen's question for Governor Waller, a presumptive chairman? What's your question, Whalen?
He was very bullish on shrinking the balance sheet earlier this year. Ask him how he feels now. Ask him where the ground is now.
I don't have to work.
We're landing in the fog. We don't have an altimeter, okay? Where is the ground? Does he know? That's the key question.
Brilliant. We'll try to get to that again. You're going to see that in the 9 o'clock hour tomorrow with Christopher Whalen, his speech at the Council on Foreign Relations, and then I will grill him as best I can. He's really he's a prodigious intellect, folks, particularly on the game theory of central banking. Okay, Chris, let's go to it right now. I suggest that the major banks led by JP Morgan and Bank of America literally are hiding how profitable they are. In the Whalen history, back to Grandpa Whalen, great-great-grandpa Whalen was with Alexander Hamilton a few years ago. Chris Whalen, describe the profitability of this modern era of ginormous big banks.
I'm not sure that they're that much more profitable today than they have been in the past. Asset returns are barely 1%. They are giving back capital because they're underutilized. Why are they lending all this money to non-bank, non-depository institutions? Because loan demand otherwise is pretty slack. Deposits are growing twice as fast as demand for loans. So hopefully when rates fall, we'll see volumes pick up a bit. Like last September, this September too, by the way, is going to turn out to be a very good month for banks and non-banks. But, bottom line is that there are so many alternatives to traditional banks now that have been spawned in the equity markets and are funded with equity and debt, that you have plenty of places to go.
Spawned.
Yes, exactly.
Only Whalen would say spawned.
Hey,
private credit was spawned.
Exactly. Hey, Chris, I want to get your thoughts on the housing market broadly defined here. That affordability issue continues to be a huge issue for people, particularly young people. I got a mortgage rate, still got a 6 handle out there, and I've got housing costs that are up 50% since 2019. This is a problem, isn't it?
It is, but it's a problem that's going to be fixed. Donald Trump is going to goose the housing market with his friend Bill Pulte. They want to support home builders at a time when the home builders have already got too much inventory. Supply has caught up with demand. And remember the prediction of my good friend Stan Middleman, the founder of Freedom Mortgage, misery on the 8s. I think we see a maxi home price reset in 2028. If you've got that high coupon mortgage, wait a little bit and maybe go into a floater, and then you'll be able to refinance it much lower in a couple of years.
So, Chris, I guess the question is, there seems to be a housing shortage in this country. I'm not sure how we got there. How do you think that happened?
In some parts of the country, not everywhere.
Okay.
Here in New York, in the blue states where we don't build, yes. It's astounding to me because this is a market that had very poor volumes before COVID. But the prices keep going up because nobody's building houses.
Right.
Down south, we have the opposite problem. In the Carolinas and Texas, Florida, we are up to our earlobes in supply.
Right. Michael Barr wants equal time. Chris Whalen, quickly here. Every bratty undergraduate wants to know, when's a new book come out?
Well, the second edition of Inflated is out, of course. And I did that for you. David Kotok did the introduction, by the way.
Very cool.
And we're working on a gold book for next year, which will be great
Very
fun.
good. He'll probably talk to Ike Green. That's the way Chris Whalen rules. Christopher Whalen, thank you so much. I can't say enough, folks, the importance of his skepticism about some of the verbiage of our financial system. Stay with us. More from Bloomberg Surveillance coming up after this.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
She had a huge impact the last time she was on. Fatima Boolani joins us. She is at Citigroup, and she is hardwired into the technology and software industry. Fatima Boolani joins us for an important brief this morning. Buried in your note, Fatima, we're not only in the first inning, the third batter's on the on-deck circle. Yep. You've got 6% of software spend is on AI. Where is that software spend on AI in 1 year, in 3 years, in 5 years?
Well, it's a race to catch up here. We have the pleasure and privilege of running our CIO survey every quarter. So excellent time series data and information about, an average organization and very large organizations' appetite and proclivity to invest in particular parts of their IT infrastructure. And I think the trends we are seeing is we're inching closer and closer to having AI, generative AI, and related efforts to operationalize this concept of AI really showing up in the budgets, in the wallet allocation.
Right.
And so, I think it's tough to sort of look into the crystal ball and say that 6% is going to become 12% in the next 12 months. But the infrastructure spending and the velocity with which we're seeing so much capital being thrown at, enabling the AI enterprise, it's only a matter of time till organizations catch up. And really, one of the gating factors, and actually there are several gating factors, there's a lot of spaghetti being thrown on the wall right now.
Paul, we got BlackRock and NVIDIA, $40 billion today, a small number. Moments ago, Oracle collaborates with Microsoft to enhance supply chain efficiency.
There you go.
I have no idea.
No idea.
Only Fatima knows what that is.
Fatima, I know in your survey here, the next 12-month IT budget growth weakens with the U.S. and EMEA below historical levels. Why is that, do you think?
I think the inference there is there's most likely some share shift happening, right? Most IT organizations have the unfortunate decision and dilemma of, keeping the lights on. So you have to invest in your existing footprint of IT infrastructure and capabilities just to keep the lights on. But then at the same time, you have to sort of invest where the puck is going. Look at me mixing my metaphors, right? And so
very good. Did you say that's very Gretzky-like?
Yeah.
That's the partial Canadian in me talking. And so really it's this notion and this inference of we're going to see some wallet share shifting in terms of allocation, right? So how do you avoid starving initiatives that help keep the lights on in the organization whilst also straddling this executive and boardroom mandate of we have to do something with AI, we have to invest in AI, we have to create capabilities and operationalize these AI efforts to build business value and deliver business value.
It seems like all Tom and I talk about all day is AI, but your survey indicates that cybersecurity remains the number one investment priority. Talk to us about that.
Yeah, I partially joke that once cybersecurity falls off the number one perch, wake me up when that happens, because this has been a very, very consistent theme and trend in, over a decade of survey results and survey work that we've done, right? That being said, cybersecurity has become this snowballing, this juggernaut of a priority for boardrooms. And now, especially now, because your attack surface has, effectively metastasized, right? I mean, back in the 1990s, it was your corporate network and the internet. So you just had to protect, you just had to bear your corporate network against the internet. And now it's cloud, it's remote workers, it's, your distributed offices, it's AI, right? And so the new blind spots, the exposure, the susceptibility of what used to be a pretty tightly controlled network is completely unfurled, right? And so you kind of get this dynamic of your entire attack surface not only has increased, it's also changed, and it's added so much more nuances. And so that's why, cybersecurity is sort of going to be the perennial number one spot. And, one of the things that you sort of asked me earlier was, well, what's stopping organizations from taking 6% of their IT budgets allocated towards AI initiatives to 20, 25, 50. Cybersecurity is one of those reasons.
Okay, that's
right?
brilliant. Yeah, Fatima, that's just brilliant. Mark Bergen, folks, his brilliant effort. I read it cover to cover. Like, comment, subscribe. Mark Bergen's definitive book on YouTube. Thank you for that. He writes this morning for Bloomberg News, Fatima, Microsoft cuts fourth N-scale deal with Texas AI data center. They're going to build, I love this, Paul. Thank you for Bloomberg AI. N-scale, 240 megawatts of power. The site will deploy 104,000 new NVIDIA Corp chips. The rest of it I don't understand. Fatima, how does a pro like you, who's worried about cash flow at Microsoft, how do you bring in this utility constraint that Mark Bergen writes about this morning?
It's a fair question. And the way I will frame this for you is, organizations are principally trying to solve for productivity gains, right? Business value, productivity gains, et cetera. So a lot of what we're seeing on the software side in terms of the monetization question, right? Yeah. We're seeing the picks and shovels trade in the AI trade opportunity on fire. It is absolutely in fuego, right? And, one of the main overhangs on the aggregate enterprise software space is when are software vendors going to get paid for all this stuff, right? Right now,
okay, when? We got to go. Fatima, that's precisely the worry that Lisa Mateo has about AI. Do you worry that the software vendors won't get paid?
We think software vendors are going to get paid, but it's important and critical to pick your spots. We like to bifurcate the entire enterprise software space into application and infrastructure. And we're firm believers that the infrastructure software space is going to be the more insulated of the two.
Right.
I'm certain you've heard the terms of vibe coding and large language models, chasing application software companies, out of the room, right? And so there's a general view, and we subscribe to this as well, that if you provide tooling, software plumbing and tooling that's sort of behind the scenes, that's a better position to be in terms of monetizing and commercializing.
Fatima, Paul's yelling at me, go to bar. Fatima, I got 20 seconds. Your single best buy right now at Citigroup.
Big fan of a company called Rubrik, RBRK. Not one that's on everyone's lips. It's not one that's talked about very much, but in an era where data is going to explode, the fidelity and integrity of your data is going to determine how good your AI applications are. Oh, and by the way, if there's a cyber attack that happens and you have to recover all this business data, Rubrik is the way to play.
RBRK, is that right?
Yeah, that's right. $16 billion market cap. Stock's up about 20% year to date. It's doubled over the past 12 months. So it's been a good one there.
Yeah, she didn't call me on this. Fatima let me down and didn't call me up a stupid buy. This Good Morning Palo Alto.
Yep.
3,200 employees.
And they all
Fatima, don't be a stranger. Fatima Boolani, just love it. Thank you so much. She is with Citigroup. Stay with us. More from Bloomberg Surveillance coming up after this.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
Time now for the Daily Look. It is the front pages around the world. Do we thank Lisa for the newspapers?
Sure. Any days.
Newspapers? Tell me there's nothing on the banks.
No, nothing on the banks.
Okay, what do you got?
Okay, have you gotten those annoying scam text messages?
All the time, like out of control.
I know. It's like saying you have unpaid parking tickets.
Fix it? Tim Cook, I know you're listening. Do something.
Fix it. Okay. Well, we now know who's behind this. So this is in the Wall Street Journal. Really interesting. The Department of Homeland Security is saying criminal organizations in China have made more than $1 billion in the last 3 years through those text scams. They have SIM farms.
Yep.
That's how they do a lot of it. They use the credit card info. They buy iPhones, gift cards, clothings, cosmetics as well.
I got one yesterday. It was absolutely verbatim text message that I can't remember the vendor. It wasn't the bank. It was somebody else. Paul, it was perfect.
Yeah. Mine is Easy Pass.
Yes.
I have Easy Passes all over the place. My kids got them.
Correct.
So who knows? But I'm not paying anybody anything until you come to my door.
Yeah. So this is the thing. They're trying to they can't do anything about it.
Put a man on the moon.
Exactly. But they if you look at the article, it really goes into the whole process of how there's videos showing the people doing it. I mean, it's such an intricate process. But yes, the question still remains: what are we going to do about it?
Next.
Okay. So I'm going to pull an audible on this because since we go from tech scams, remember the scam in London? All these phones being stolen all the time. 80,000 phones stolen in the city last year. So the police are saying it goes to the black market for European cell phones in China. Sure. Here we go again. The same phones. Some are reset. They're sold to new users in Britain. But a lot of them, they're shipped to China and also Algeria. And in China, the newest phones, they could be sold for like $5,000. Wow. So this is what's going on there. So the reasoning behind that, because you hear those stories.
The tech management, all these guys with $1 gajillion, they're showing up for FaceTime with the president. This is where they could really help people with their technology. I just don't get it.
I don't either. Okay. I want to go to this new ranking. It shows the declining strength of the U.S. passport. This is in the Washington Post. It's the latest edition of the Henley Passport Index. So this index basically ranks nations based on the number of destinations someone can go to and visit without needing a visa. Okay, so it shows the U.S. passport. It's fallen out of the top 10 most powerful passports globally the first time in 20 years. It's now at number 12, tied with Malaysia.
There you go.
A decade ago, it was at number 1. So you could see the declining. Singapore is the number 1 spot, 193 destinations, followed by South Korea and also Japan.
I got the Irish passport back in the day, like 30 years ago. They were giving them away.
Did you?
Yeah. They were literally.
Did you get a case of Guinness with that?
No, but I used it after 9/11. I had a lot of travel after 9/11. I felt more comfortable with the Irish rum back in the day. Yeah.
See?
Yeah. So, but
I know lots of people getting I do not do that.
Yeah. I mean, again, this was 30 years ago. And it was, you send in like a $10 check. And
I want to get a passport for Quebec because Montreal's killing it right now.
There you go.
Do you have any more? Are you done?
One last one. This is about, remember those fancy long business lunches that you probably used to do? They would extend into like dinner time and keep going. Well, the Financial Times is saying weight loss drugs are killing that business. You know, the business lunch, because a lot more people, they're ordering less. They might not want to go because they're eating less. They don't drink alcohol as much. So it really goes into that and how it's hurting restaurants too.
Lisa Mateo, wonderful newspapers. Thank you so much.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.